if you're self-employed, here's some paperwork to make sure that you don't forget about, or just as people run their business now, and one day they'll probably be talking to us, what are some things they should consider as they're kind of like building their business, just to be able to sell themselves properly, I guess.
Yeah, listen, I mean, I think that it's one of the key factors in having all your ducks in line and having all your paperwork completed.
Hold up.
The other obvious one, which I think you were going to lead into, was self-employed. And so what's your experience been like in working with self-employed individuals, Paul?
Biggest thing is that some people do not have 2 years worth of average income to even go off of. They just started a new venture. It's COVID. Maybe it's a blessing in disguise. Now they're an entrepreneur, but guess what? They haven't made the revenue yet. A lot of people self-employed, of course, they write off a lot of taxes and they declare less than they actually make. And of course, banks usually look at what you declare on your T1, right? Where you're like, no, I made a lot more. I just didn't declare it. So, but if you look at my bank account, you'll see that I actually made more money. Banks are like, nah. I think some B lenders will be like, yeah, okay, we'll be practical about it. We'll look at your bank account last 6 months. And then anyways, there's more of a practical approach to accounting self-employed income. And also if your time horizon's a little tighter than 2 years, then there can be better exceptions there. Like you can look at, I guess, 6 months sometimes, right?
Absolutely. I think the majority of alternative lending clients tend to be self-employed or commission.
Right. Sure.
And it's the balancing act of claiming income and paying tax on it versus writing the income down per the what they're allowed to do within the framework of their tax structure, which is the better way to do it. And ultimately, I think that for the most part, you'd find that people are better off in an alternative mortgage where the rate's a little higher and benefiting from the tax savings.
Exactly. That's a huge one.
Than having the tax burden or cost and of otherwise than having to qualify for a traditional bank mortgage. And so again, there's lots of great solutions and it's a very standard solution that many Canadians take advantage of, some for a short horizon and some for a longer term horizon, depending on their particular household balance sheet and how this finds them.
Yes, I love it. Yeah, I'm going to make a note around that, is that there is a break-even point of when it makes sense. Like, I guess people say, how much should I write off? And as I write that off, how much do I save? And how much does that hurt how much mortgage I need for my home? So I think people got to do the exercise of like, what home do I want? What's my minimum down payment? Can I qualify for it? And if I write off X amount, how much do I save? But then how does that counterbalance my affordability? And if it literally puts you from like affording $800,000 home to $600,000, you got to decide, is it worth saving 10 grand on the tax side to then settle with $600,000 home? Right?
Yeah, I mean, absolutely. I would say again, I mean, I always am a big advocate for clients working with mortgage brokers to have these conversations.
Totally,
again.
Yeah.
You're self-employed, you have the complexity of your business, then you've got the complexity of your personal finances. Oftentimes they're very commingled. Again, it's just really important for you to be working, not only with a chartered accountant, but also obviously with a mortgage professional who can help you understand what all the different options are for you. And again, I mean, back to your earlier point, we can work with professional self-employed folks who have been in business for a shorter period as well, just depending on overall what they do, what overall their business, what business they operate, and what designations they have. But we can certainly help people who have been in business a little shorter time than people who are potentially waiting. Back to your earlier point about opportunity cost of home ownership, waiting it out to have 2 or 3 years worth of tax returns, potentially buying in the short term. You could wind up with a benefit there. Ultimately, for me, it's just about education. And I think, that's where I started off by talking about Financial Literacy Month. And I think it's just so important that Canadians are educated on what the options are for them.
Totally.
And again, it's something that's exclusive to mortgage brokers, where you've got that kind of access out to all the different lenders and the different solutions that are available,
Mhm,
and then
mhm.
weighing those options and feeling out what's right for you and your family at that particular junction.
Yeah, and just to dive in a little more into the self-employed topic, because there are a lot of people who are BFS or business for self, right? As we like to say in the mortgage world, especially because of COVID and all these digital opportunities. So you said there's some professions within self-employment you look at differently or more favorably. You're like, you know what, that's a bit of a safer bet than that one. Do you want to talk a bit more about like the professions within self-employed that you're a bit more generous with, or even take it the direction of if you're self-employed, here's some paperwork to make sure that you don't forget about, or just as people run their business now and one day they'll probably be talking to us, what are some things they should consider as they're kind of like building their business just to be able to sell themselves properly, I guess.
Yeah, listen, I mean, I think that one of the key factors in having all your ducks in line and having all your paperwork complete is certainly working with a good accountant so that you can
Right.
understand exactly all these different structures and what's available to you.
Hmm.
I think if you're self-employed and you're good at what you do, then you should stick to what that is and not necessarily be trying to do your own finances.
Sure.
Yeah, again, I think that when, as it relates to professionals, doctor, lawyer, accountant, medical
Right.
professional, certainly those are professions, IT consultant, where if you haven't been in the role for as long, they are ones that we would consider for a mortgage with a shorter tenure.
Sure.
And then you've got our trade, our trades folks
Hmm.
who it's been proven, I think, during COVID, that trades are
Hmm.
an essential service, and certainly going to be a service that's busy all the time. And so again, I think the idea is to make sure that your banking is set up appropriately, the deposits are going into your account, and you're not
Hmm.
necessarily, moving money around to a degree that's not traceable. So
Right,
following
that's
a very
huge, that's
steady
huge.
flow of deposits,
Yeah, business,
obviously
personal.
keeping your taxes up to date,
Hmm.
having all of your taxes completed, and at least having that paperwork completed with T1s and notice of assessments that are available to your broker.
Hmm.
And then it's really just about understanding your business, the bank deposits combined with the tax returns, to have a really good understanding as to the overall personal income that you would be drawing from that business. And I
Hmm.
think that's how we would look at it on the mortgage side.
Got it. And also, if people have big expenses, you need to factor that in, right? So, I mean, there's stated income programs. That's a whole other topic. But I guess generally speaking, people should try to keep their costs low, try to keep their costs separate, business and personal. Those seem like two major things that people are doing now. Then they're going to be able to, again, claim as much income as possible to qualify for, again, your generous extended debt service ratio. So that's a really good thing to touch on. Hey, just to wrap up, I guess people at this point hopefully are considering more B lending, but there's a lot of B lenders out there. It's a competitive space. So yeah, what makes you different from other B lenders in this kind of current day and age in late 2020?
Yeah, thanks for that. Ultimately, I would say that the Canadian mortgage industry has many excellent alternative lending solutions available
Hmm.
to Canadians, and in particular mortgage brokers. The at XMC, again, this is what we do for a living. We're experts in the mortgage space, and so we only complete residential mortgage transactions. So it's
Hmm.
about having an understanding of how the client arrived in the predicament that they're in, or
Sure.
helping them with the solution that meets their needs. And it's something that we do every day. And so, when you're dealing with a lower beacon, or a previous either
Credit score.
consumer proposal or bankruptcy,
Hmm.
again, it's about really just understanding how the client potentially landed in that space and how to help them move forward.
Something
And when
banks
you're
don't do. Something banks don't really do, and other B lenders maybe less empathetic. Just to get really specific around like what makes you guys really like a better go to. Just put it out there, right? Like you
Yeah,
don't,
well, I
right?
think I just think it's about a deep understanding. I think empathy is key,
Right.
and I think it's a deep understanding of what potentially could happen to clients, and in the role of an alternative lender to help them move forward. And those are things that we're very good at. We also employ a group of experts in our underwriting and fulfillment departments that can work
Hmm.
with the brokers in terms of reviewing the documentation and
Sure.
reviewing the overall submission.
Yeah. They're great at
Also,
follow-ups, by the
we
way.
lend. Well, that's nice to hear. No, and
Mhm.
we lend across the country, and so as well, we understand the different pockets of where people reside, and are able to then understand the real estate that's involved and lend against it accordingly. And so,
Mhm.
I would say it's a great industry. There are a lot of great mortgage providers on the alternative space. We are definitely one of them. And I think what we do really well is certainly understand the scenario of the client and offer them the best solution at a very reasonable cost for them at that particular junction.
Yep, I love it. And to wrap up, and I think we've probably actually covered a lot of the subsequent questions in our first few questions. Is really great. Parting words, things that perhaps we didn't get to dive into as much as you'd like, as far as advice to, again, first-time buyers, people that are entrepreneurs, just mortgage seekers, and of course potentially their realtors or accountants. What are some parting words or things that people should consider if they're let's say 3 to 12 months from buying? Like, what are some things they can do now to be better prepared when they talk to us?
Yeah, listen, it's a great question, and certainly the understanding all the complexities of home ownership and being prepared to get a mortgage, and so
Hmm.
the ability to tap into a first-time homebuyer program and leverage your investments. And again, I think that within the RRSP savings program, you know.
Hmm.
You don't actually have to physically have been a first-time homebuyer to tap into that. You can tap into it if you haven't been in the market for so many years.
Good to know.
Um, so I think that's an important piece to have a deep understanding on.
Hmm.
And again, I would say look beyond the rate. I think the rate is an
Hmm.
important discussion, but there are lenders like XMC where we offer you a home warranty system that comes with your mortgage for the first year that covers things like major issues with electrical or
Oh well,
heating.
it's
And
a
so that's a
value add.
nice little
That saves you
plus.
money. Yeah, I didn't
Absolutely.
even know that.
And you want to look at your amortization and see, what is the
Huge.
right amortization, pick the right term, pick a mortgage that you ideally could potentially be portable,
Right.
depending on what could come in the next few years. And so again, there are so many different functions
Hmm.
in reviewing a mortgage beyond the rate. I know that the rate is a hot topic and one that people
Sure.
will explore themselves. But I'll end where I started, and I've said a few times along the way. Pick a mortgage professional that
Hmm.
you really feel comfortable with. This is someone who you're going to be sharing a lot of your private information with,
Hmm.
and
Hmm.
you're going to want to trust them. And also, you're going to want to pick a realtor that is equally up to the challenge and understands what you and your
Hmm.
family want out of your either your investment or
Hmm.
your first time home buy. And again, in the spirit of financial literacy month, I was just looking at some fun things that people have been posting lately.
Hmm.
um, it's always great to save up a little extra money. I was looking at something where someone was posting their coffee expense on an annual basis versus making coffee at home, and it wound
Yeah.
up being 70 or $80 a month in savings.
Yeah. What's
um,
up?
I think that the overall experience of purchasing a home is one that you can expect some potentially additional costs, hiring movers and all the rest
Uh-huh.
of it, where you could potentially have some costs that are there. And
Got
so
to budget
I think
that.
saving up accordingly and managing your expenses along the way in preparation
Huge.
for being a home buyer are all great. And just
Huge.
really familiarizing yourself with all the different advantages that the government gives,
Yeah.
and that lenders offer to help you with that along that journey. It's a very exciting journey, and one that it's a wonderful industry, and I'm really proud to be part of it. So
That's awesome. And as am I, man, you hit so many points that I would love to dive in more. So we'll have to have you back on another day. But one thing I will say right now around your point around don't just chase rates. You want to save money. And that could be saving money overall, which we call cost of borrowing, right? Or you want to save money in your monthly cash flows because you've got other things you got to budget for. So one thing I should say about you, for some products, you have a 35-year amortization, which means that even if you have a higher B rate, but it's across 35 years versus, let's say, an A bank rate at like 1.6 or 1.7, they may be paying less per month because you stretch out the mortgage to 35 years versus 25, and they're just paying less per month. Sure, it's more expensive overall sometimes. However, if I want to save more money per month, a 35-year amortization usually is going to be less than a 25-year, even at a better rate.
Well, again, interesting point. I mean, cash
Right?
flow is
Cash flow,
oftentimes king, right? And so you want to
huge.
take on a payment that you can afford, and these mortgages all come with prepayment privileges, and so
Right.
there are different ways you can look at it. Whether you want to have a very high payment on a monthly basis, which will directly impact and lower your amortization, or you want to maintain a cash flow with a lower payment, and then on an annual basis potentially put a lump sum. Again, going through the calculators that are available online to better
Totally.
understand the impacts of those are key. But ultimately, it could be the difference between buying a home in the neighborhood that you want versus buying a home in a lesser neighborhood or a different neighborhood, given if you can stretch a bit. And so again, I think that if you talk to people over time, that buying real estate and transacting real estate, there's an opportunity there to certainly make money. But again, it's not always necessarily about that. It could be the school district where you want your kids to live, and
Right.
so many other components. And so again, I think that there's so many different pieces to consider, and rates one of them, on the insured side or the conventional side as well, but it's not the only one. And I think there's other things that to keep in mind through that pre-approval and eventual approval experience.
100%, Derek. Really, really grateful for your time and your insights. Again, this opened up a ton of topics that for sure there'll be discussion on social media, and of course, literally on with client calls. So thank you for that. I will link a lot of your information to the show notes so people can either look at your site, learn more about you, et cetera, et cetera. And of course, this was fantastic. You put so many things that people need to consider, and even I, as a broker, some new things I remembered or didn't know about that I got to consider for my clients. So you're a wealth of information. Obviously, you've been in the industry for a while. You know your stuff. That's incredible. So again, thank you for your time, and look forward to seeing how Financial Literacy Month evolves. And this is great, man.
Paul, it's a pleasure. Great to see you, buddy, and hope you're keeping well, and hope this finds you and your family safe. And thanks for the time. Much appreciated.
Likewise, ditto. Yes. Thank you so much, Derek.
All right, man. Take care.